Have you ever wondered what happens to money in a bank account after someone passes away, especially when it comes to taxes? It is a common question, and understanding the answer can bring a lot of clarity and peace of mind for those navigating an inheritance. Yes, inherited bank accounts are generally subject to estate taxes as part of the deceased overall estate. However, whether actual taxes are paid depends on the total value of the estate and applicable federal and state tax laws. The good news is that most estates do not owe federal estate tax due to generous exemption amounts. The reason for this lies in how the federal government defines a gross estate. A bank account, like other assets such as real estate, stocks, and personal property, is considered part of the decedent's total assets at the time of their passing. This collective value forms the gross estate, which is then assessed against the federal estate tax exemption. If the gross estate's value falls below this exemption, no federal estate tax is typically due. Additionally, some states also have their own estate or inheritance taxes with varying thresholds and rules, making it essential to understand both federal and state regulations. To navigate this, beneficiaries should first determine the total value of the decedent's gross estate, including all financial accounts. Next, compare this total to the federal estate tax exemption limit for the year of death. If the estate is below this limit, it is unlikely to owe federal estate tax. For states that impose their own estate or inheritance taxes, it is important to research their specific thresholds and filing requirements, which may differ significantly from federal guidelines. This careful assessment helps clarify the tax situation. It is helpful to distinguish between an estate tax and an inheritance tax. An estate tax is levied on the total value of the deceased person's assets before distribution, while an inheritance tax is paid by the beneficiary receiving the assets. Another key term is the portability election, which allows a surviving spouse to use any unused federal estate tax exemption from their deceased spouse, potentially doubling the amount that can be passed tax-free. This can be a significant advantage for families planning for the future. Ultimately, knowing that inherited bank accounts contribute to the gross estate, while also understanding the high federal exemption limits and potential state-specific taxes, empowers you to plan proactively. This knowledge can help minimize surprises and ensure a smoother process for you and your loved ones during what can be a challenging time.